G'day everyone, welcome back to Pete's Investing. Today is April 7, 2023. This is the spot silver price update. On all three timelines, silver's doing quite nicely. It's on the CCI 1500. On the daily, it's in an upswing. On the 4 hourly, likewise, upswing. And on the hourly, in a nice strong upswing as well. However, be mindful we're reaching these key resistance areas, and I'll talk about those in each of the charts. So on the daily first, you can see here I've got these resistance area up here at 25.13 and a support area at 19.91, currently in that range. It's made a nice little rise to that initial resistance area. Our secondary resistance will be this diagonal ascending trend line. And you can, if I zoom out, you can see there where it's put it through those key areas there. So to be more confident about going long, I need to look at you need to look at first of all the lower time frames, and we'll do that in a second, but also respect it and break above these resistance areas. So it may actually bounce to the downside in the coming hours or possibly days. So that's there. And also notice I'm using the CCI 1500 as our key indicator, primarily for those new to the channel. And that's because here, for example, back here in March 21, it told you when it started trending below the moving average, it told you to be careful about going long. So it gave you an early signal to get out. Now that was similar to the moving average 200 of the price chart back here. But again, the moving average, the price broke above the moving average, which according to the CCI, that was almost like a false break, although you could have traded profitably if you were careful. But again, this is just telling you to be cautious about going long. There was a bit of an up swing here, back here in November 22, and then it broke below again, and then currently again, more recently in March, it broke above again. So just a little helpful tip, as opposed to using the moving average 200 of the price chart, I use the CCI 1500 and a moving average 400. On the 4 hour chart, again zooming in, you can see there's those diagonal trend lines, and a couple of things to notice is I've drawn this diagonal trend line as well a few days ago actually, and that's actually following, it's been tracking against that. I did initially draw it against these lows, but then it gravitated them back towards that moving average as well. So respected that diagonal trend line quite nicely, and then now it's bouncing off this resistance area. So nothing to notice as well is for those new to the channel, I usually respect any divergence, and here you can see a bearish divergence on the CCI versus a bullish divergence on the price chart. There was a very minor divergence, but there is a divergence nonetheless. So even though the CCI moving average is telling you to go long, this is telling you to be careful. There's a bearish divergence, and it ultimately did break to the downside. So just be aware of any divergence that do play out. That's the 4 hour chart. On the hourly chart, again, that's showing you a bullish movement to the upside, and that's also shown by this diagonal trend line reaching these key resistance areas. Now I've drawn a Fibonacci retracement between that low and that high, and our first initial level of support will be the 23%, which is at 23.91. Now a key area of reversal will be the 61% if it gets to that level, and that's 21.93. It's a bit way off at the moment, but that's always a possibility, so just be mindful whenever looking at a change of direction, it needs to break that 61% Fibonacci retracement, and by that stage the CCI moving average will be broken to the downside as well. Now also, as a trading idea, when all things are going in your favor, all three timelines, I like using the fractals. So if I zoom into some of these, give you an idea, for example. So back here, for example, that broke above the fractal. That would have been a nice entry to go long. And I normally use a percentage gain to get out of a trade. I try not to use moving average crossovers or anything using an indicator, because they generally, you'll notice here, for example, had you used, if you're following that sort of logic, you would have been probably broken out below your entry level, almost, or close to your entry level. So I like using small percentage gains or monetary gains, and you would have gotten out a nice little profit there. There was another break above the fractal there. Now that broke to the downside, and we don't use stop losses, we use the average down approach. But we won't make sure we break down far enough before re-entering. So we wouldn't have entered any other trades in that period, but we would have entered long there and potentially long there, and you would have got out potentially with a little percentage gain during that point. So again, I use little percentage gains on the hourly chart. and also like larger percentage gains on a larger time frames. Like the daily, I might use a 5%. On the hourly, I might use a 0.005% gain, for example. That was another entry potential there, and again, you would have had a nice little gain there. Again, only trade in the direction of the major trend. Avoid going short, even though there was some breakout to the short side on some of these fractals. So again, to understand how to properly trade using the average down approach, reference the links in the description below. Subscribe and like us and support us on Patreon as well. Links in the description. And see you in a future video.